Adani Ports and Enterprises bounce back after the Adani Group issues a clarification for research firm Hindenburg's report. A few group stocks, however, continue to trade with huge losses.
Bajaj Finance third quarter numbers meet estimates. Loans issued hit an all-time high in the third quarter. The stock is up close to around 5%.
Bharat Electronics revenue meets estimates on the back of strong order execution, but margin contracts higher than projected, as a result of which the stock has corrected 5%.
Kalyani Steels reports a weak quarter as volumes decline. The high fuel cost also dents margins, leading to a contraction. The stock is down 5%.
Data patterns, on the other hand, revenue doubles in 9 months. In the first 9 months of FY23, margins to expand. The management tells CNBC-TV18 they're targeting a revenue growth of 40 to 45% in FY23. Stock up 16%. You're watching us here on Chartbusters. It's been an extremely volatile, rocky start to trade, with the first 15-20 minutes accounting for just about 200 points on either side of the index. Currently around 17,600 for the market. Let's see where we go from here. We will keep an eye out on the way it moves. I'm Mangla Malu, with me Nigel D'Souza. We're talking about earnings coming in thick and fast, and we have with us the management of Radiant Cash Management Services. It is the first quarterly performance that the company has reported ever since its recent listing. We do have with us David Devasahayam, who's the chairman and managing director of the company. Thanks a lot, David, for joining in. You said, pre-listing that your margins from the first quarter will sustain. Well, they have sustained in that range, but we have seen some quarter-on-quarter dip. So wanted your thoughts on where the margins are likely to be. And secondly, how many vaults and locations have you added in this quarter? Where does this number go to going forward?
Well, Jai Hind, and thank you for welcoming me this morning. When we had the issue in the end December, I was always hoping that we'd get an opportunity to quickly put up our third quarter numbers. And third quarter numbers have, clearly validated, and what I have been saying, that we are onto a certain growth trajectory. And we have already reached a revenue of 266 crores at the end of the third quarter, as compared to 282 crores of revenue of year-ended 22. And our PAT margin has, the third quarter itself has grown by, compared to the third quarter of last year, has grown by over 50%. So it's a very positive growth trajectory that we are on right now. And growing further. So the number of points, which determines the number of outlets that we do, which was at about 47,000 outlets at the end of year 22. We are now close to 60,000 outlets. So the medium term, the kind of growth that we are hoping, which I had said that we will be achieving, of 22 to 24%, we are on trajectory. And we are on moving in that direction. With your question regarding vaults, 7 of our strong rooms, which we had a strong room, are currently, as we speak, in the process of being converted to vaults at different locations.
Okay, all right. Hi, Colonel. Good morning. We have taken those points on board. A couple of questions, though. What kind of a margin trajectory are you looking at? And as of the 9 months, your net profit number is closer to around 50 crores. Do you think you can end this year with around 70 crores of net profit? Say for the next year, you see an increment from there on. And by FY25, can you get to the vicinity of net profit of close to around 100 crores? Go ahead. Margins and profitability, what is it likely to look?
Well, I think we are on trajectory right now, by all indications, and the fourth quarter is likely to be on track the way it has been so far. So I wouldn't like to give any public guidance on to what exact numbers to expect, but we are on trajectory. And as of now, you can see we are at close to about 18% plus PAT margins, and that's likely to continue.
So 100...
in the medium term...
Colonel, just to clarify on that, so a 95 to 100 crores odd mark is gettable, right? In terms of net profit by 2025. Obviously, things can change. But as of now, you're on course to hit that number of 95 to 100 crores by 2025?
Yes, we're on track to achieve a 22 to 24% year-on-year growth. Definitely, we are on that trajectory, which approximately translates to about 1,200 points or 1,200 outlet increase, which, as you can see from year 22, where we were at 47,000 points, we're at 60,000 points today. So we are growing in that direction. The point I'd like to say is that as of now, the nationalized banking sector is not really outsourcing or not using this service. We are empaneled with almost all the nationalized banks. In addition to that, now for their clients, whom they have, their marquee clients, we are now looking at targeting them in a direct manner. And that is going to be one of the key drivers of growth, as I see, up to year 25. So yes, I think we're on trajectory of a 22 to 24% growth year on year.
Take that point, David. Thank you for detailing that for us. Just a couple of more questions from our side before we let you go. Network currency management, that small margin accretive, that contributed about 24% of your sales in FY22. Now the contribution is down to around 18%. What sort of mix do you expect coming in from the network currency management? And the second one is the number of vans that you have. That has increased, but as a contributor to your revenues, vans are just around 5.5%. So on both these accounts, what do you think the contribution will be going forward?
Well, network currency management, yes, I do agree that there appears to be a dip, but I personally feel that in the time ahead, this is only going to increase, and that's my personal feeling about it. With regards to the cash funds, we are at about 840 cash funds right now, of which 100 are owned by us. And as you know, that in the fresh issue, we had planned to buy another 200 cash funds, so we'll go to over 1,000 cash funds or cash stocks that we'll be having. And that is basically targeting also at the segment of cash in transit, where as of now, we don't have much of a presence. But thanks to regulatory, now that a large number of there's been considerable consolidation in the industry.
Colonel, just wanted to understand, you said network currency as a contribution will increase. How much will that increase to? It's currently about 18%. Last year was close to 24%. What does that ideal number look like?
I think it will go to between about 20 to 22%.
Okay.
In the coming year. That's what we're expecting. There are some new deals that we are currently negotiating. So it's a kind of prediction that I have. I feel that it's going to grow.
And what about dividend payout? I think you were hinting at 30 to 40% dividend payout. Do you stick to that?
Well, I did not give a public guidance on about 30%, but we have announced a dividend right now, an interim dividend, right now to all the new shareholders who are coming. It's a small dividend, an interim dividend that we have now declared, and we are going to have a strong dividend distribution policy.
To that, Colonel, do you want to put a number to that? What kind of a number can your shareholders, because they're listening into you, they would like to know what should be the rough dividend payout that you have drawn up?
I wouldn't like to put a number to it or give any kind of public guidance, but I would say we'd like to have a very strong dividend distribution structure.
Okay, all right. We'll keep an eye on that, and we look forward to chatting up with you. You'll be doing a rough math. 22 to 24% is what you're looking at in terms of a top line growth. It comes around 550 crores approximately by 2025, and you take 18% on that. That's what gives a sense of around 95 to around 100 crores. Let's see whether or not you get there. But as of now, you're stating that you're on course to do that. For the time being, though, we'll shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that is tracking closely. Nitin?
So the company that I have chosen for today is Sona BLW, an auto component manufacturer. The stock price and the financial performance of the company has been under pressure due to weakness in the demand from the European region and severe shortage of semiconductor chips. The stock is down around 45% from its all-time high achieved in December 2021. However, if we look at the Q3 numbers, the company witnessed a significant growth of around 38.8% in its top line driven by new orders that it received and the rich product mix. And in fact, its EBITDA margin also expanded by around 77 basis points. Now, talking about the multiple factors that make us upbeat about the company. First, the company's technological innovation and technical know-how has made it leader in the various component in the electric vehicle space. Companies partnered with who is who of the industry, and it has products catering to not only to IC engine but electric vehicle engine as well. Now, talking about its order book, the company has an order book of around 23,800 crore, out of which 72% of the orders are coming from the electric vehicle space, which indicates the trend going forward. Now, talking about its valuation, the company currently trades around 41 times FY24 projected earnings, which, if we compare with any other auto ancillary company, seem at elevated level. However, given the growth potential and the opportunity that company has, we believe the valuation are reasonable, and we advise investors to accumulate this stock in staggered manner.
All right, with that, we'll step into a short break. Thank you for joining in and giving us those ideas. With that, on the other side, we will be having...
Welcome back. Well, Kalyani Steels, they saw a weak quarter on a year-on-year basis. Though on a sequential basis, there was some improvement in the margins. Mr. R.K. Goel, the managing director of the company, joins us on the show. Hi, Mr. Goel. Always good speaking to you, sir. Well, let's clear out a couple of issues. I recall that you had invested in a coke oven as well as a WHRS facility, and they were likely to show results in the coming quarters. I think you had guided for around 60 crores in terms of savings on a per annum basis. How much of that is reflected, and by when you get to that 15 crores of savings on a quarterly basis? And in the near term, what does it mean for margins? Margins have improved on a sequential basis. Improves further in quarter 4?
Yeah, good morning. As far as the coke oven and waste heat recovery boilers and the power production is concerned, I think everything will be on by March 31st, 2023.
Okay.
So the complete reflection of savings will appear in Q1 next financial year. And I'm pretty sure we will definitely save 60 crore and maybe a little bit more.
And what happens to the margin trajectory? I mean, a couple of quarters ago, it was at 7%. Now it's 13%. Has it bottomed out? And if yes, is it likely to go further higher to historic levels of 15 to 19 odd %?
You know, margins in our industry is largely dependent on the negotiations with the OEM. Currently, we could still not settle the price for Q4, and Q3 is also, OEMs are looking for some discounts or some reduction. It is still on, and let's hope we are able to quickly conclude with them. Currently, costs are going up, and we definitely expect some price increase, while they believe that they should get some price reduction. So this debate is on, these negotiations are on, and maybe soon we will have some result out of it.
So quarter 3, you are still in a tussle, but for quarter 4, I think you were demanding a 6,000 rupee per ton increase. Is that correct?
You are absolutely right. Okay. There are a lot of changes which are happening. One is the coking coal prices have gone up substantially, coke prices are going up, and over and above, iron ore prices have gone up substantially, as well as some of the ferroalloys like moly and all. The prices have gone up by more than 50% in last couple of months.
So, you said that you are asking for 6,000. How much are they willing to give? How much are you willing to settle for? I mean, is there any numeric conversation around that? I mean, give us a sense.
So as of now, no number has come from them. We have given our number, our calculations. So we are still in discussions.
And if this wasn't to come by, what could the impact be on your EBITDA?
So, it depends what at what level it settles. We are waiting for that, and then only we will work out what the EBITDA, impact on EBITDA and all. We are waiting for that.
Yeah, at least give us a timeline, sir. By when does it get closed out?
I don't think anybody can give any timeline.
At least for quarter 3, sir. For quarter 3, the quarter is already over.
As far as we are concerned, it is already over.
Okay, so you're working with that the price revision was flat. There was no revision.
Flat. Absolutely.
And now you're demanding quarter 4, you want to see 6,000 rupee price increase, and both of you all will debate whether or not that should happen or not, right?
Absolutely.
And if that doesn't happen, say, God forbid, this is also flat for you right now. Those guys are asking for a reduction. You are asking for an increase. The settlement is made at flat levels. What could the impact on your EBITDA be?
Definitely our EBITDA will be lower.
By how much?
It may go down by a couple of % at least.
Okay, all right. Mr. Goel, I wanted to ask you about the cash you're generating. You know, even though the market gets a little bit brittle, but what holds you in good stead is that Kalyani Steel is sitting on a good amount of cash balance, and you're continuing to generate cash. Give us an updated number. What is the net cash in your books? You know, so I'm saying remove the debt. What is the net cash in the books? And what will you use it for? The street is waiting by that now Mr. Goel will come on television and talk about the big capex plan or some inorganic growth. But we are still waiting. So go ahead.
Okay. Now, as far as the cash part is concerned, we have more than 600 crore free cash net of debts. The quantum is that. At the same time, we are working for various technologies in even non-ferrous area, non-ferrous products. And because of this war, there are a lot of issues related to technology and all. So we will come back as soon as we are able to finalize our plans in a concrete manner. Maybe it may take another few months. We'll come back to it.
Right, you are talking about nearly 50% of your market cap currently being held in cash. By when will you have any clarity on what you're looking at in terms of usage? You're saying that there are a lot of opportunities which you opened up, which are also in the non-ferrous space. So that's interesting. By when will you have clarity?
It will take few months because we are in discussions with various technology and equipment suppliers and working out feasibility and all. So as soon as we are able to complete the work, then we'll come back.
Mr. Goel, what do you mean by non-ferrous? What are you looking at?
Other than steel.
Wow, I mean, what all could it be? My imagination is going wild.
It is premature to name the product, name the areas where we are working.
But it's going to be in metals itself, non-steel metals.
Yeah, it is in metals, but non-ferrous.
Okay, that'll be interesting. We will come back to you and we will hope that you come back to us with a plan in the next couple of months, etc. as well. But thank you so much for joining in and giving us all those details. But have you ever considered that, the right investment would also be a buyback of your own shares because the valuations at which your company is trading right now?
You are absolutely right. That can be one of the possibility. But I think we should be able to finalize our expansion plans shortly.
So what about a buyback? What about a big dividend?
We had last year we had announced a big dividend. We can look at it. At the appropriate time, we will look at it.
Okay, all right, Mr. Goel. Till you finalize that, we wish you well and we look forward to having you back on the show. Thanks so much for joining in.
Thank you so much.
Well, time to slip into a short break, but as we do that, it's time for our CNBC-TV18 budget quiz. Remember, there are prizes to be won every single day. We give you a question at around 9:14 today, and in case you missed it, here's the question. What is the percentage of the expenditure budget FY23 was allotted to defense? And you can share your options. They're up for you on the screen. Send your answers on Twitter. Post your answer as a comment on the question. Tweet on CNBC-TV18 News. Use the hashtag BudgetWithCNBC-TV18. Now hurry and send us your answers. We'll announce the winner at 3 p.m. today.
CNBC-TV18 presents Mutual Fund